All right, good evening, guys. This is the Friday night Tortoise Strategy podcast for November 20th, 2020, a reading of the weekend reports. We'll start with just a quick debrief of today's trade. So after this peak price on Monday, we had 3 days of sell-off, but that third day would look like a potential reversal as it found support at the bottom of the dragon and then tested to the top of the dragon. And what we had today was an inside day that gapped down slightly and finished at the bottom of the dragon. So we are still in a critical state, and if anything, that thing just got a little bit tighter and a little more compressed, and the dragon itself is starting to roll over. And we've already had the RL10 rollover. So now, the concern would be that we have something like this where that dragon is now going to give us this kind of action here. So that's certainly one pathway out of here, and that looks a lot like this rollover and the previous rollover that happened here. So this could be one of the pathways ahead, in which case, there would be an argument that it comes down to find support near the long-term fair value. It would have to come through this checkpoint halfway down of the Bollinger Band mean. That would be the reversion to the mean trade. It would have to get through the RL30 extension, the PSAR extension, the PSAR price levels to get down to the Bollinger Band mean. But then if it gets through there, there's this gap that's got to be filled. And then if you look at this price action in here, that gap almost looks like this. So really, if that Bollinger Band mean and the 10-day low doesn't hold, then it can fall down here to the bottom of Z1 pretty quickly. And that would be just an extension. When we had that long sideways motion here, that would bring it kind of back to 337 en route to fair value at 335, belly of the dragon 332.5, belly of the RL10 326.80, and then the 30-day low down here at 322. Of course, now the upside argument says no, this could find support here and then maybe start another roll up that looks like this, in which case it's going to find support somewhere in here, and maybe that could come down this far, but really the test of that is, can it get through? It really has to get through the RL10 peak at 362. That's sort of the indication that it's this. Otherwise, as the election shenanigans drone on, we could see maybe some kind of price action that looks like this, where we get some kind of oscillating. It would be unusual for it to be that tight. When you take a look at this great big oscillating period here, this was from 348 down to about 332, which is $16 on that, which is about a 5%. This oscillation is about 5%. This oscillation would only be about 2.5%. So it's not until this 5% sell-off that this thing could even oscillate down that far. And that's why that 10-day low and the Bollinger Band mean is so crucial right here, because this price level at 348 has to crack to really open up this great big move down. So this little oscillation could come down this far, it could be here, it could be there, or it could be just this green line, pause and go. So it'll be interesting to see what happens next week, because, if the election recounts and all that, and the election certification was a trade, then that's coming into a critical state, because there's a time compression and the president and his administration are running out of outs. All of their first placeholder lawsuits are being dismissed as frivolous, and nothing that you've seen makes you feel more confident that he's got something. So the clock is running, and it doesn't look good for him, and good riddance sooner rather than later. I don't think he'll ever formally concede. I think he'll just leave office. And I would love to see him buy CNN, convert it to the Trump News Network, if you can use both of those words in the same sentence. And or Trump Storytime would probably be more like it, like an Archie comic, for those of you of a certain age. And then that would give Fox some real competition, and I think that would actually be, it would be an interesting and healthy thing to see, a Trump network opposed to Fox network, opposed to the CBS, NBC rabble, with truth not found anywhere, carefully out of the, not contained in any of those networks. So that's what the scenario looks like for me, as I'm plotting this out overhead. To me, the most likely is this one, where there's some pullback, but I'm not seeing any urgency to get down in here. The real issue there is that, is the Fed still likely to act if price gets down in here? And that's why, to me, really, this 10-day low, this price at 348, is just so darn crucial. I'm marking that up with a real strong crayon. That's really got to hold. And then, starting next week, that 10-day low moves up into here. So now this support level inside here is going to be pretty key. I call that 350. Any recoveries north of 350, you should be buying them. But when it comes down and tests 350, you got to stop and be ready to reverse for tactical shorts going that way, and then probably second position around 345. That's how I would look at that. Now, what's going to be very interesting is cannot read that file. What are you talking about? Oh boy, just a minute. I erased my file. Please stand by. Bear with me for half a second. Let me pause the recording again. All right, so we had the S&P down about 0.5% today. DIA, so the S&P about down 0.5%, DIA down 1%. Excuse me. Treasuries were up almost 1%, healthily above 160. And IWM, the Russell was basically just a fraction into the green at 0.11. So the large caps were suffering today. The winners, working our way up the stack, we had energy and consumer discretionary only down 0.5%. We had the FANGs, healthcare, FANGs and healthcare, and volatility only down 0.25. Materials were basically flat. Bill Ackman's fund, silver, Mexico, emerging markets all up 0.25 to 0.5. Commercial real estate and oil up 0.6. Japan and precious metals up 1 1/10. Clean energy, if you may have heard me say that before, clean energy up 1 2/3%. And then Bitcoin up 5.7%. So that swing entry yesterday around 1950 is looking pretty good. The big winners were, Bitcoin, Cliff Natural Resources, and Twitter up 3.8 and 2.5. NIO up 1.6. Nikola Motors up 0.5. Procter was basically flat. Now, as we're looking at the things that underperformed, and there were many, more companies than there were sectors, though. You have oil exploration and tech down basically 1%. You had Brazil down 2.25%. And you had the triple techs, the TECL down 3 1/10. And the NASDAQ triple, the TQs, down 2%. So the broad tech sector was suffering today. And then you had the underperforming companies, Wynn, Virgin Galactic, Devon Energy, Boeing, NVIDIA. Tesla finally gave up a little bit at 1.9. Walmart, Google, U.S. Steel, Dow, Apple, Microsoft. So a lot of the big tech leaders that had been pulling the market north this week, or letting it not slide as much, gave back some of their gains. So that's that. Just a couple trades to look at before we dive deep. So this one is Treasuries, and there's a combination play going on here. So the market was weak. Treasuries had been weak previously, and so today was a pullback in the market inside that dragon, as we saw. And then as the market got weaker, Treasuries were able to get up through 160. So I've been looking at here's 160.40. So all of this price action north of 160 and with the VWAP north of 160, I took to be a psychologically useful level. And so it got above 160 up to like 160.70, and they're just kind of chopped around. And then at this moment, we have a couple things going on. You should recognize this as a sideways quiet channel, because you got all this price action going sideways. You have that sideways quiet channel has become a Z3 pinch. And now you have the RL270 now enters the super pinch, where you have the RL90, the 30, the 10 already there, and everything chopping sideways. So that makes this, yes, Elizabeth, you guessed it, it is a super pinch. And again, as we saw yesterday, a super pinch can just be like radioactive goodness, just ready to go. The little acorn that I need to get a stamp that has an acorn on it, because that's what that is like. And so now the spring turns to summer. It gets up past Z2, and it breaks out above the previous Z3. So that's the Z3 breakout from a super pinch, and then that thing just goes because there's no resistance overhead, because that lack of follow through all the way through here gets broken when price gets above that Z3. That represents a significant psychological state change. So that breaks out. It just keeps going. So why not? Because this is only about a 10 cent risk. That's maybe closer to 8 cents, but call it 10 cents because it makes the math easier. So now it's moved up to execution R. Makes a run. This was an opportunity to add a third position, but I haven't been trading treasuries that much, and so it just felt like 2 was reasonable. This gives us that double, those 2 bars north of Z2 that don't hold. It looks like the horns of a dragon, and then it pulled back, and then we just get the routine Bollinger Band mean exit along with the PSAR exit right in here. So that's a nice little trade. And that's 1, 2, 3, probably 4 R on the first one, and probably 2 more R on the second one. So that's about 6 execution R. Now I was very tempted to stop and reverse here where we have the breakout below Z1, and then this gives you like Kata 2 to the south. I was tempted there. I was tempted here when it became winter and was becoming a Z3 breakdown, and my target I was looking at was a return to the VWAP, and I was really kicking myself by this time for not getting into it. And at that point, I just said, well, if I was going to get into that trade, I should have been in it already. So I just was going to just let it go and just be content with the returns on treasuries on the long side, because the rest of the market was still kind of weak, and I wasn't seeing any shift in the psychology intraday. So I elected just to let that one go and wait for a Kata 2. And this one looks like it's a Kata 2 if you treat this as a giant swing low and a next higher low, and then this gives you a 1, 2, 3, and then you're buying it. Then you're buying it in here. But this also counts to me just like a supported spring crossing, because there's your winter sell-off. It has found support north of the VWAP and is now starting to resume. You get the RLXD, you get the PSAR flip. Winter becomes spring. Spring is becoming summer in here, so that looks like a natural place. And my thought is that it held support here and made that run up here, so maybe it's going to at least get that high again. So when I'm making that trade, I'm really looking for it to get back to the RL270 and that previous support level, or previous resistance level. And then when it makes that move in an orderly fashion, I just go ahead and venture the second position, which takes out the little Z3 pinch that it has here. And this felt good. And the rest of the market was selling off. So this felt like, well, maybe that's where the money's going. It gives me another nice little bump, a second leg up. And then I take the halfway between the sniper and the Bollinger Band mean, because we're starting to get towards the last hour of the day, and I don't want to hold this overnight. So there may have been some tradable moments, but by this time I felt like the move of the day was done. And so that's the Treasury intraday trade. Earlier in the day, the one I want to highlight is the idea of a pure sniper play on VXX. So VXX is special because there is no underlying entity. There's no underlying company or index that, or a region or a commodity. It is purely a play on the psychology, the short-term psychology of a bunch of alpha male, high-frequency traders. And so this one felt like a harsh winter, and I'm setting up the SSC entry right in here. So we've got the harsh winter. We've got the dragon crossing the baby dragon. It enters the dragon, exits the dragon. Winter has turned to spring in the usual way, and there is the PSAR flip. So the SSC entry should be somewhere in this bar or this bar, because you don't get the PSAR entry, or the PSAR flip, I should say. This PSAR here doesn't flip until this bar closes. So really the soonest you can buy it is here. But where I'm actually buying it, where I'm being aggressive with like a sniper entry, is that I'm trailing during that whole winter, because this is VXX and the market is weak. I'm waiting for that turnaround and then ready for it to go on continued market weakness. So I decide to buy that in here on that trailing PSAR stop as it comes right here. So I'm like 1 or 2 bars early, and I get that entry over here at just short of 1850 with a 5-cent risk. And now at this moment, what I'm looking for is this support level holding. I could see that being a resistance level, all of this stuff inside here. And at the peak favorable excursion, the VWAP was this. So in my view, if I'm going to be a sniper, then if this was the maximum excursion, then the place that they would run it back to is either going to be that VWAP there, or maybe this price level here at the Bollinger Band mean. I was also looking at this Bollinger Band mean that prior to the breakdown of this big red move, prior to that breakdown, this is where the Bollinger Band mean and the VWAP were together, right? So that to me feels like a price, that feels like a return to normal, right? So as I think of this downward move, then the return to normal is either going to go like to the RL270 or the current VWAP or that Bollinger Band mean, or back to this Bollinger Band mean, or even really all the way up to that. This is if it was really lucky, it could go back to yesterday's VWAP. So that's this one here. So this move could actually go that far. But now, because I'm waiting for confirmation, all of this favorable price action means that the soonest I feel like I can get in is here. So I've already missed this piece of the retracement. So with only a 5-cent risk, now a move just to the Bollinger Band lets me get to no lose plus dinner for 2. And so you'll notice that right here, when price gets through the Bollinger Band mean, is the time when I can move my stop aggressively to no lose plus dinner for 2. The other thing that's happening there is there's a really strong 1-bar move out of this this grind. So there's some grinding going on, and I'm in here, and I've got my stop, and I'm happy because there's 2 bars of improved price action. It's holding at the VWAP. What's it going to do? I don't know. I don't have that much risk. But on the next bar, it just takes off and blasts through the VWAP, the Bollinger Band mean, the 90, and halfway to Z1. So I just say, you know what, that's good enough for me. And as this bar is closing, I just move my stop from here to there, and now I've locked in. This gain. Let's put that in green. So I've locked in that gain, and I've taken away, you know, my risk, which was this one. All right. So as I count this up, I've got, you know, my open risk was from this entry for, you know, about 3 or 4 minutes. And then again, as soon as I see this strong move up to here, that's when I move my stop from down low up to lock this in. Now the next bar is another favorable one. It dips a little bit and then takes off sharply and gives me another move up. So it gives this move. Now it is through this bar's high. It has breached the Z1 and is now halfway to Z2. So on the basis just of that favorable price action, I take my stop which was here, and I just go ahead and move it halfway up this bar and just lock in another piece. So I don't like paying for the same real estate twice. So this is this next strong leg up. I've now if you look at it, what I've done is in 2 bars of little like sniper locking it in, I've locked in one execution risk here, second execution risk there, and I just leave that one in place. This was kind of an inside bar. This one peaks north just for a minute and then comes down and breaks the 2-bar low and re-enters the river. And you know what? That's 2 execution R. I'll just take that because this is a 5-minute trade for 2 execution R. So this is very refined sniper technique. And so if we just total it up over here, you know, the yellow was the initial risk from the entry over in here down to the belly of the dragon. I'm not even going to the PSAR. I'm just taking the belly of the dragon because I can manage that much risk. And it gives back about the same an execution risk, and it picks up 2 execution risks just in the middle in a few minutes. So that for me is a sniper trade. Now it turns out that this support level that it came all the way back to, it held this support and then closed pretty nicely for the rest of the day. So let me check that real quick to see where it, I'm trying to remember off the top of my head where it closed at. VXX, where it at? It closed at 1860. Yeah. Yeah, so this thing ended up going much higher and then came back and closed at 1860. But I wanted to just demonstrate the thought process of short-term time frame scalping. Now, the logic chain on this, this is what it looks like on a minute chart. But this is also what swing trading looks like if these were daily bars. The same kind of logic allows you to manage those stops, but you have an awful lot more time to think about it, but it takes an awful lot longer for it to unfold. But that same technique about finding those turning points and then framing trades on the basis of these key statistical indicators gives you that kind of price ladder on the way up that you can start estimating reasonable returns as it moves up the price ladder. The fact that this thing had 3 bars and it didn't go further all the way back to the previous VWAP, says maybe that's all there was. And that made it easier just to cash two birds in hand versus one in the bush. And Eugene points out, yeah, this looks like a Z3 reversion. It really does, because you have this extreme move to the downside is very much like Kim's bounce pattern, or the Anderson regression line stretch. She probably gets in sooner than I do. Like, I think she would be looking at, when this thing pushed down to Z3, she would probably be getting in here at the bottom of the dragon, like a 1, 2, 3 entry with a really tight stop. And you can see that would actually add an extra unit of risk. It'd be the same risk. It's still 5-cent risk down here. And that would be a stop and reverse because it made a new daily low. So Kim, this is one of the reasons Kim outtrades me on my own systems, is because she's willing to pull that trigger just a little bit faster based on the statistical anomaly of a stretch of that far. So, but that's how I played this one. I like to see it get across the dragon. I'm really liking this lagging PSAR entry because it allows you to get in here instead of over in here, and it saves you a piece of that move. Okay, so that's what I wanted to say about that one. All right, let's go to the weekend report. So we got another. God dang it! I got another meeting in about 10 minutes. Shoot. All right. We're going to flash through this pretty quick. All right. So hold on to your glasses. This one actually goes pretty quick. So we've got bullish normal. We've got oversold, almost oversold conditions short term. Favorable bullish conditions. Risk Z is still favored, although it's getting a little elevated up in here, but it's still favoring the long-term swings. These symbols are still dominating on the blended monthly rebalancing. PBW is just crushing it. ETF2 remains at 100% exposed. Monthly market health check. This has been a very nice recovery. I'd have my stop here at the edge of the river at about 345, or at the edge of the floodplain at about 345. There's 330. The Z1 at 320. This PSAR flip in the southern skin of the dragon at about 300. But this is very favorable. It's still above the previous, that previous peak, previous month high. So that's still very favorable. On the weekly, it held like an inside week, but that's good because it maintained the gains of that 2-week excursion, and it held on to those gains pretty nicely, even with the little give back that it gave today. So I treat that as pretty rock solid. The weekly support is at about 348, and there's 340 at the PSAR and the southern skin of the dragon. The daily we've already seen. ETF blended monthly portfolios. Treasuries I think this is just a tactical anomaly and some low-hanging fruit. Otherwise, the internationals actually did better this week than the U.S., and you're going to see that in surprising numbers in other places. So there's Australia, there's Asia less Japan, all good, and outperforming, and EFA was up for the week. So the internationals are benefiting from the longer-term view of a return to normalcy in the U.S., even as the U.S. is suffering through some election counting remorse, and I'm not going to even highlight this anymore, but doggone, clean energy. What's going to stop it? Energy, the regular energy sector actually had some gains. In the Dow, these were some of those winners. Boeing held up pretty well after a good month. It didn't really lose that much. These two just went out and got slaughtered. That's a Biden administration for you right there. And again, United Health. So we got to be, this looks like a sea change in healthcare. Innovative technology that includes some Tesla. Retailers are, I guess that would be the retailers that have a strong online presence. That's all I can think of. Software and services, easy. And treasuries had a good recovery. There's your top three right there. And the reason I like PBW is you can see why. Of those three in the clean energy space, that's the one. The large caps gave back this week in the world market model. And still, with the S&P at 29, now some of these other real estate and commodities are starting to make a little bit of a recovery and getting back to parity. Regional banks making a little move. The Russell Value Index on improved confidence in the U.S. But South Korea, I think, is another good one because it gives you that global, but also a mature country that has a strong tech base. Okay, we're shifting to the daily real quick because I only got a couple minutes here. No signals in channeling and overreaction. The Dow 30 winners, 3M, Goldman, Walmart, Verizon, and IBM. The losers, Walgreens, Boeing, Amgen, United Health, and Microsoft. I still believe Microsoft, because they are not Facebook, Twitter, Google, Amazon, they're going to benefit, I think, in tech space, but they're a little better corporate citizens, is my feeling. Tons of dojis today. Tons of auto framers that are setting up. So we got some deliberate work to do this weekend to take a look at things that are 5 days down, a 551W, plenty of auto framers. So this is a target-rich environment that you should be taking advantage of to get your swing game on. The ETFs were more decisive, meaning fewer dojis, still a healthy number of auto framers that look good. And notice the strength in the rest of the world. EFA had a big breakout, and so did Japan. Had a big breakout, and Mexico's been pretty good. I think it's reasonable to look at treasuries as an opportunity here on the swing. As long as it's above 160, I'm buying. Lots of auto framers, so I'm going to let you read that as well. Lots of the one-day pinches, just too many to shake a stick at. And favorable conditions for swing trading on the basis of risk Z. There's your two defensive plays, treasuries in Japan. And I like the ones that had big moves today. Nike, 3M, Travelers are some opportunities. And the ones that got rejected, Visa and Amgen, rejected Disney and Boeing. So lots to choose from here. That's everything I got. We're going to do the True Story Time in the morning with Zoom. If you didn't get an invitation but would want one, send me an email to LongKE and I'll invite you to that one. It's at 10 o'clock Central with a simple one-page rule sheet. We're going to be exchanging stories without comment about a moment in your life when you discovered who you were and what your purpose was and what that felt like to you. And we're just going to receive those stories and acknowledge them without speaking about them. We're just going to hear them and feel them and use that as the basis for regenerating our human spirit around the True Story fire pit. So we're going to give that a test. And then about 11 o'clock will be the hybrid trading Q&A. I'll do a Sunday night lesson and then a Saturday night lesson, then a Sunday night lesson as well. All right, that's everything I got for you. And take good care, and we will see you in chat tomorrow. Take good care.